Thanks to everyone who's coming online. We'll just give a minute or two longer for people joining in, and we'll start in just a moment. So thank you very much. I see we have a few more people entering, but let's get started. My name is Emily McKenzie. I'm the Technical Director at the TNFD Secretariat. And I'd like to welcome you to this, which is the second in our series of TNFD Forum webinars. So welcome. We now have more than 275 organisations who've joined to be members of the TNFD Forum and actively support the work of the task force. So thank you to all of you as members and welcome. The members include financial institutions, companies, market service providers, governments, civil society organisations. So we have a real breadth and diversity of organisations in the forum, and I hope many of that diversity is represented here today. This webinar series, for those of you who are new to it, it's an opportunity for forum members to learn more about the latest developments relating to nature, risk, reporting and disclosure from other forum members and from the Secretariat. We run the webinar series on a monthly basis. So I am delighted today in our second webinar to be discussing the important topic of what two central banks, leading central banks, have learned from their own work evaluating nature-related risks. We all know central banks and supervisors have an important role to play, particularly around systemic risks, and we're delighted that the Network for Greening the Financial System, NGFS, are one of 13 knowledge partners for TNFD that we announced yesterday. We really welcome NGFS's support, and we know that interest in nature and biodiversity risks among central banks is growing. The joint study group of NGFS on biodiversity and financial stability launched, and the Inspire Research Network that's related to that, they published their interim report in October, and we're really looking forward to the publication of the final report of that NGFS study group in March of this year. And there's interesting work by a whole range of central banks, the Central Bank in Chile, the Banque de Mexico, many others. So it's exciting to see this work growing, with some organisations just beginning their thinking, others like the two we're going to hear from today, leading and really mature in their analysis. So we're excited to accelerate this work together with you all. Just on the format for today, we'll have two short 10-minute presentations from our speakers, and then we will turn to have a lot of time for conversation and Q&A. Please add your questions via the Q&A function and upvote any that you'd like to see answered. We'll have one of my colleagues will be reviewing that and sending those that are popular to me to relay to our speakers. Also, this webinar will be recorded and sent to you in the next Forum Insights newsletter. So with that, I would like to introduce our speakers. I'd like to welcome Dr. Joris van Toor. He's a policy advisor at the Supervisory Policy Division of DNB, the Netherlands Bank. Last year, he co-authored the report Indebted to Nature on biodiversity-related risks for the Dutch financial sector, which he will be telling us a little more about today. And he did his PhD research on the performance of banks. Also welcoming Dr. Romain Schwartzman, who's a senior research economist at the Banque de France's Climate Change Center in the Financial Stability Department. And Romain's work focuses on the integration of environmental risks into monetary policy and financial supervision, and on the potential macroeconomic implications of transition paths. And last but not least, Dr. Antoine Godin, who's a senior economist and the head of the GEMS macro modeling unit at the Agence Française de Développement, who are another partner of TNFDs. And at AFD, he works on the development of a suite of macroeconomic models that are analyzing the transition to low carbon economies for developing countries, and we'll see how that may be being extended to nature-related risks also. So with that, over with the introductions, and I'd like to hand over to Joris for your first presentation on the work of DNB.
Thank you, Emily. Thanks for having the opportunity to to present part of our work here at the TNFD Forum. So I will quickly start with the presentation because I only have 10 minutes. So this report, Indebted to Nature, was published in the midst of 2020. And to give a bit of background why we started to do this work, it was several years. I think in 2016, as the Dutch Central Bank, we started digging into the climate-related risks, I think at the moment, currently, this has spread across many jurisdictions, many central banks and financial supervisors. But the question was raised at one point internally when climate change can lead to physical and transition risk, or maybe also reputational risk. Could this also apply for other sustainability issues? We looked into water stress, resource scarcity in another report, and also biodiversity loss. And at that point, so we published that more qualitative analysis. And at some point, the PBL, so the Netherlands Environmental Assessment Agency, with whom we co-authored this report, approached us whether we wanted to dig into this further, with their combining their biodiversity knowledge with our knowledge of the Dutch financial sector, and that is what we did, and that this led to this publication. Yeah, please, the next slide, Eliza. What I wanted to start with is the theoretical framework, or it's not complicated at all, I hope, but how we looked at this issue of biodiversity loss and how that could lead to financial risk. On top of this figure, you'll see. Can you still hear me? Yeah, okay. On top of this, on this figure, you see the financial institutions represented by these sort of Empire State Buildings. They are investing in companies, providing loans to or investing in. So in our report, we focused on banks, pension funds, and insurance companies, which are the main financial institutions the Dutch Central Bank is supervising. And we focused on companies in the sense that we focus on companies in the second stage, where you see this aircraft and this windmill and these tent. This represents all kinds of economic sectors. The Dutch financial sectors are investing in or providing loans to. So what I mean by that is we didn't look at, for example, government exposures. So we didn't have a look at in our report. I mean, I think you can make a case that you can do that also for biodiversity risk, but our scope was limited in that sense to companies. And then in the next step, we said, okay, we separate between physical risk and transitional reputational risk. And physical risks stem from the so-called dependency on biodiversity and ecosystem services. So I always give the example of an apple farmer, which is dependent on animal pollination, the ecosystem service animal pollination. And when the insects that are providing this ecosystem service decline, the amount of these insects decline, this can lead to issues for the company's operation, leading to also physical risk for the company, but ultimately for the financial institution financing or investing in these kind of companies. I'll give an example of an analysis we did on the next slide, but before going to the next slide, I wanted to stress also the second channel, the impact channel. So as you probably all know, is companies still have a negative impact on biodiversity through land use change, through pollution, through overfishing. And this negative impacts, when, for example, when, for example, governments will take action to protect nature, either internationally with internationally agreed agreements, such as agreed upon at CBD, hopefully next year, or more locally. This could lead to this enforcement could force companies to change their operations, or even to relocate, or to invest in less nature negative production sites, for example. And this could also lead to transition risks for these companies, and ultimately also for the financial institutions investing in these companies. Please, can I go to the next slide? Yeah, so for this presentation, I wanted to share with you one of our analyses for physical risks. And we did more, and one for transition risk, and I left out a reputational risk here. But please, if you want to know more about that, have a look at our at the report. So what did I depict here is we depicted for, it's the font is a bit too small, I think, but on the left hand side what you see is the exposures of banks, pension funds and insurers, and here we only represented the exposures which are highly or very highly dependent on one or more ecosystem services, and these ecosystem services you see on the right hand side. And to discuss a bit more detail on how we did this is, first we separated out what are the financial what are the financial assets these financial institutions are investing in, or via which assets are they exposed to biodiversity loss. And then that's the second step. You see loans, shares and bonds. So especially for banks, it's almost exclusively loans, and for pension funds and insurers, it's both shares and bonds. And we then using the sectoral classification of these loans, shares and bonds, we link them to I think it were 64 or 84 business processes which were identified, I think, by Encore, and the Encore tool links these business processes to ecosystem services, and also ultimately to natural capital, but that step we left out here. And what you see here is again, we only depicted here exposures that were highly or very highly dependent on one or more ecosystem service. So on the top right hand side, for example, for surface water, you see that for the Dutch financial sector, I think it's 250 billion euros is dependent on surface water. And in total, when you add up over all these ecosystem services, this amounts to over 500 billion euros, which is of the total portfolio we looked at over 1/3. So yeah, this to us these were major figures, maybe even surprisingly large figures. To the next slide, please. And maybe just to add to the last slide is that in case biodiversity is under stress, of course the delivery of these ecosystem services is also hampered, leading to a physical risk for these financial institutions. And so one example I wanted to share on transition risks is depicted on this slide. Yeah, we were wondering, okay, how can we quantitatively measure this risk? And we thought, okay, let's look where companies the Dutch financial sector is investing in are operating worldwide. So not only looking at the headquarters, of course, but also looking at the production sites of companies. For example, I think Unilever has, at least in the data set we used, approximately 900 production sites worldwide. And of the total of, I think, 1,750 companies we looked at, we have production sites of almost 1 million across the globe. And then what we wanted to do is we wanted to link that to the graph on the left-hand side of this slide, to areas that are already protected at this moment. So the currently protected areas, the dark green areas on the map. But we thought, okay, but it is to be expected. And I was just before the presentation looking whether there was already some agreement on the CBD level as to which percentage the amount of protected areas should increase to. But I've seen figures of 30%, so that is the lightest green area. So we said, okay, in case it will be expanded, the currently protected areas, to what areas will this expand? And then we used a 24% scenario and a 30% scenario based on ecological criteria. And how do you then link that back to the financial sector? Is that we said, okay, let's assume you have a pension fund which invests. So this is a fictive example, invest 4 million euros in a company which has 4 production sites worldwide, one in an area that is currently protected, one in an area that is will be protected in a 24% scenario, one in an area that will be protected in the 30% scenario, and one in an area which won't be protected, not now and not in the future. Then we said, okay, we assume that each production site is of equal importance to that company, and we say, okay, we assign 1 million to the currently protected areas, 2 million in the 24% scenarios, because 1 million from the currently protected area and 1 million from the area from the site that is located in the area that will be protected in the 24% scenario, and 3 million in the 30% scenario. And we did that for these 1,750 companies, for all these production sites, and then we arrived at an exposure of 28 billion for the Dutch financial sector, which is approximately 10% of the portfolio we looked at. And what the argument is that in case these areas will become protected, and enforcement, and I think that's a big if it will, these areas will be enforced in the sense that, okay, the activities that is taking place there should really not have a too big or not at all negative impact on nature, then this could lead to relocation of that company, or even closure of that company if this will be enforced. And in that sense, this could lead to transition risk. So to conclude, the final slide, please. So yeah, what our conclusions were is that I haven't been able to share with you all these analysis we did, but we did a few more And we found quite big numbers. And you can imagine that, for example, for physical risk, we also looked at pollination dependency, animal pollination dependency. And you can imagine that maybe you want to do such an analysis for each ecosystem service. And you also want to not only look at protected areas for transition risks, but maybe also other areas or other metrics on which the international community might reach agreement upon maybe next year. So we found big figures, and still I think it's an underestimation of the total exposure. But so our recommendation to the financial sector was that they should identify physical transition and reputational risk stemming from biodiversity loss. And that's also, I think, why I am a big proponent of the TNFD, is that it's important to develop consistent and broadly applied standards for measuring and reporting on biodiversity risks, in order for financial institutions to really incorporate it into their practice. That's about it from my side. Thank you.
Thanks very much, Joris. It's fascinating to hear about your analysis. So what we're going to do is hear we're going to have questions and a conversation following both speakers. So we'll move straight into the experience from France. So Romain and Antoine, over to you to learn from Banque de France and AFD's perspectives.
Thank you very much. Thank you for the invitation to the TNFD, and thank you in particular to Emily, Eliza, and Malika for organizing the panel today. So before I start, just a brief disclaimer about the fact that the views presented here do not necessarily represent the views of the Banque de France. So our presentation with Antoine Gaudin will focus on two broad points. First, I will briefly summarize the Banque de France working paper that we published together a few months ago, along with all the co-authors who are listed here. And second, Antoine will raise a few points that may be a little bit, I would say, off topic if we consider that today was really about central bank, but I think it's a bit more from the perspective of development bank, but still I think very connected and very important as a way of contributing to this broad debate about nature-related risk. So you can move to the next slide, please. So at the Banque de France, we published this working paper in August 2021, which was the results of a joint work between the researchers from the French Development Agency, AFD, the French Office on Biodiversity, OFB, and CDC Biodiversité, in addition to the research from Banque de France. And the paper, we had three goals or objectives in the paper. The first one was to summarize for the central banking community the scientific evidence about the potentially massive socioeconomic and financial impacts that could result from biodiversity loss. So luckily, I don't need to get into the details because Joris presented the whole analytical framework, but we thought it was still necessary to kind of emphasize these points, because really there was only the DNB report at the time, so we wanted to emphasize some of these points. And we won't have time, I mean, and I think perhaps it's not really needed in this particular audience, but we wanted to raise some awareness among central bankers on issues such as the fact that we don't have a universal metric such as CO2 equivalence, the question of nonlinearity, tipping points, and so on. So just make sure that all these elements are part of the language. You can move to the next slide, please. And the second goal of the paper was really to show that although these challenges of lack of universal metric and so on call for being very cautious, it is nevertheless possible to start capturing some of the interconnections between biodiversity or nature at large, the economic system, and the financial system. And to do so, we proceeded to an analysis of the dependencies and impacts of the French financial system on biodiversity by basically building very much on the DNB reports that Joris just presented. So I won't have time here to discuss the methodologies and results in detail, but perhaps I will raise the key points for both dependencies and impacts. On the dependency side, we used the Encore database that was developed by the UNEP, WCMC, and the National Capital Finance Alliance. So basically same database used by the DNB, which enables us to, as Jori explained, basically to determine how different firms in the portfolio depend on specific 83 business or 81, I don't remember, business processes, and how these business processes depend on a list of 21 ecosystem services. And what we find, among others, again, using only high and very high direct dependencies, is that 42% of the value of securities, here we're talking about bonds and shares, 42% of the value of these securities held by French financial institutions come from issuers that are highly or very highly and directly dependent on one or more ecosystem services. On the impact or footprint side, we use the GBS tool that was developed by CDC Biodiversité with the support of Carbon for Finance. And basically this tool builds on the Globium model that was developed by the PBL, the Netherlands Environmental Agency, to which Joris referred to. So again, we're trying to really, we wanted to have this sort of comparative or a compatible language so that we can use a similar language with the DNB. And basically this tool enables us to translate different activities in different regions of the world into a single metric, which is the MSA square kilometer. Here again, I'm presenting only one result among different results we have, which is the accumulated terrestrial biodiversity footprint only, and of the securities again held by French financial institutions. And here what we find is that the activities that are financed through these bonds and shares have an impact of 130,000 MSA square kilometer, which means that it is comparable with the loss of 130,000 square kilometer of pristine nature. So to give you an idea of how much that represents, that will be about 24-25% of the surface of the area of metropolitan France. Metropolitan France meaning the part of the French territory located in Europe. So that's kind of like the map of France you may have in mind. And next slide, please. And I will be very brief on that before handing over to Antoine. The third goal of the paper was to open some research avenues. So basically, the goal was to move from the static analysis I just presented towards dynamic ones that can give us a better understanding of the potential financial risk that may lie ahead, and in particular on the needs to develop scenarios to assess the resilience of the financial system to specific biodiversity or nature-related shock. I won't have time here, but I think that really connects to the whole work, forthcoming work or ongoing work, I should say, of the TNFD. And we're very interested to see how the TNFD will basically work on issues such as what is the time horizon on which we should work to develop these scenarios, what is the severity we should foresee for different transition and or physical shocks, what are the transmission channels, how can a shock in one specific sector, for instance in the agricultural sector, cascade down to other firms, other sectors in the secondary, tertiary sectors, and of course also what are the interactions with climate change. So what we try to do in the last part of the paper, it's the chapter 6, in case you're interested, is really to envision different research avenues and raise some of the challenges that would be associated with these different avenues, but we didn't want to be too prescriptive given how new the topic is. I'll stop here in the interest of time, and I will let Antoine tell us a bit more on some of these issues actually, but perhaps a bit more with the perspective of a public development bank.
Thank you, Romain. Yeah, so the idea here is to provide some insight, of course, from the work of that we co-constructed with the Banque de France, but also giving you the interest of as a development bank, as a financial institution, how does this work translate into our operation, and especially in terms of the portfolio analysis. So if we can go to the next slide. So what we'll present here is that the preliminary lessons from constructing a portfolio analysis based on the tool that we developed with Banque de France, and then also on the as a public development bank, when these aspects are discussed with our partners, and what are the lessons we can learn from these discussions we have. So as I said, the work that we conducted with Banque de France has been is at the basis of the analysis that we are currently doing on our portfolio. And we're doing this for two reasons. On the one hand, we are trying to anticipate the change in regulatory framework that might come, but two, also because as a transparency analysis. And one of the first lessons that came out is that approach of using a strong sustainability approach. So first, recognizing that there is a multidimensional aspect to the biodiversity, both in terms of impacts and dependency, and that it is important to avoid a priori substitutability between the different types of natural capital and ecosystem services. That implies that we try to stay as long as possible to the biophysical level to compare practices across projects and then monetize when needed. And this is really important, especially if we want to try to understand what kind of projects are having a positive or negative impact on biodiversity. And this really needs us to stay at the biophysical level, and using too much of a monetary aggregate indicators loses this capability to compare practices. The second lesson that we got was more onto the importance of the concept of double materiality. This is really important because as a financial actor, it's important to understand both the impacts we have on our projects, and that especially in terms of development policies, but also understanding their dependency. And so this concept of double materiality has been very useful in the discussion we had with the project leaders and with the portfolio analysis that we're conducting. And the third point, which of course is kind of obvious, but still, we all know that in the current situation, the data is lacking, methodology is still very much under construction. And so to us, it was really important to have these two principles, for example, the strong sustainability approach and the concept of double materiality to guide us, and to know that even though we still are constructing data, constructing methodology, it is important to use these concepts. For example, we are currently working on the concept of sovereign risk associated to this biodiversity risk, and then trying to use these important concepts into our analysis, and hence checking the different impacts it might have on trade, fiscal, and socioeconomic indicators. Can we go to the next slide? The second important research agenda that comes out of the paper that we worked with, we developed with the Banque de France, was to try to say, okay, can we construct a public policy dialogue around it? So moving away in a way from more central banks, but then towards financial ministries or development or planification ministries, and see, can we construct a policy dialogue that helps in protecting and absorbing the dependency and adaptation to these appearance of biodiversity. And so what we're first doing is trying to develop the methodology for developing in emerging economies. So as Romain was mentioning, in the current situation, we only analyze securities. Here we try to incorporate debt, and the work that the DNB has been doing, of course, is very important in that regards. And the second point is, of course, developing more data granularity, especially on ecological impacts and ecosystem services in different countries. And so here, the approach that we are developing with SGAP allows us to start doing this kind of data building. And of course, following up on our analysis of the portfolio, trying to assess and help other public development banks to do their portfolio analysis. And in terms of the dialogue, what is important here, and I think this is something that comes out of the two presentations by Joris and Romain, is that it is really important to understand that this transition connected to the low carbon, to the biodiversity, is more than a change in production. We need to understand the systemic effects in a systematic way. So what Romain was mentioning, the fact that we need to identify sectors, the cascades that are coming from different sectors, is critical. And in that aspect as well, it's important to understand the multidimensional effects that these transitions might have, right? Both in terms of production, financial aspects, but also fiscal employment, and so on and so forth. So it really is trying to assess, again, the systemic effects in a systematic way, because it will then allow us to have a better understanding of the complete impacts that these transitions might lead. And of course, the last point is trying to compound climate and biodiversity exposition and the feedbacks that they have between them. That has been also crucial. We were currently working on an exposition analysis currently. So seeing, is it the case that sectors are both dependent or having impact on biodiversity and climate, and whether we can identify sectors that are crucial in these aspects. So I'm hoping that these different elements can help in the debate and get down to earth in a way, trying to go to the core of the discussion we might have afterwards. Thank you very much for your time, and I think we can conclude here.
Thank you very much, Romain and Antoine, and yeah, very interesting. So just as a reminder, I know people are starting to add questions into the Q&A box. Please do upvote them as well, so we turn to what people are most interested to hear from. But we'll move now into a conversation. We've had one question from Caroline in the government of the Netherlands, which actually was a question I had also wanted to ask. So one of the things we know from ecology around systemic risks is that you can have ecosystems, as in the descriptor review we talked about, non-linear systems. They can flip, there can be a tipping point, and the example of the Amazon is often used, potentially moving from rainforest to a savanna system, affecting rainfall and wind patterns that would affect farming conditions as far away as the central US. And I think work by the World Bank and others has indicated there's these potential spillovers, economic and financial spillovers. So I guess Caroline's question was how are these kinds of systemic risks integrated into your analysis? I'd just like to add to that the question of how central banks and supervisors and development banks, you think they can help to better understand and mitigate these kinds of risks in particular? Over to you. I don't know if Joris, you want to take that first, or?
Yes, thank you. So I think, but Romain should maybe answer it for himself. But I think in both of our analysis, at least in ours, this hasn't been included, in the sense that I think first of all we looked at the financial institutions, which I think is more of a micro actor than a macro actor, or a micro level versus macro level. And secondly, we didn't look at how one ecosystem service is or the non-delivery of one ecosystem service is impacting the delivery of another. So these are I think two ways. What we did is we looked at, at one point snapshot, we looked at the one ecosystem service, for example, and how that impacts a financial institution. But I think that doesn't mean that it shouldn't be done. So that's a second point I wanted to stress, is that currently internally we are looking into how biodiversity loss can have a systemic impact, and then this will not be tackled through the financial institutions per se, but can also be done via the overall economy. So in case the overall economy is hit because of a certain ecosystem service is no longer provided, then currently they are looking into how can we model that. How can we model the impact on the economy, and how could that then in the end lead to a macroeconomic impact also for the financial system. I hope that answers.
Yeah, that's great. Romain or Antoine, did you want to add anything on this?
Sure, perhaps if I may jump in. I think that I fully agree with I think it's a very important question, and it relates to the other point or question asked as well by Caroline about whether the figure are big enough. I think it really relates to that, and to question I think asked by Elena Wright also about the question of planetary boundaries. So I see this question as being very connected. I think clearly we don't capture that, and one question for me, or one challenge, if we wanted to capture that, would really be how do we proceed? Because there's a question where first, if we look at what's done in climate economics, climate finance, we could say that in most of the case it's not really done either. So it's difficult to have like some models that show the catastrophic impacts. So we know from reading IPCC report or IPBES report that it could be catastrophic when you look at like the most of the climate economics literature, well, it's less catastrophic. It's just a few percentage points you lose usually compared to business as usual. So there's really this question as a central banker, who are we basically to say, okay, we should be using something else? There's a question where in the literature, we should be able to take something rather than inventing it ourselves. I think that's really a challenge we face. And basically, I mean, personally, at least, I really don't want to use a model where I know the impact will be minimum, but I clearly don't have all the knowledge necessary to build a model where I show how catastrophic it could be. So that's really a trade-off, and I mean, a difficult question. And then there's if we look, for instance, at another challenge, especially for, I think, for high-income economies, is related to the fact that we need to have some of the cascading effects I briefly mentioned, and Antoine also mentioned, but more on the physical side this time. Because, for instance, there's this recent, very interesting report published by the World Bank. I don't remember the name right now, but they use different models, including GTAP, Invest, and they show that, like if we were to lose a few ecosystem services by 2030, this could have major impact on macro variables in that case, so GDP for mostly in developing countries. But the question is that if we use the same model in high-income economies, we don't really see any impacts. And one could argue, but obviously you will have plenty of impact through value chains and so on. And again, it's how do we work on that? I mean, personally, I would be extremely interested in seeing also the TNFD being engaged on these issues and so on. And the short answer to summarizing this very long answer is that personally, I don't have the answer right now, and I'm not sure that central bankers are in the best position to have it. So I think it's a broader question for the whole community.
Thank you very much. Yeah, I think building on this knowledge that we know that the processes that in ecosystems that supply us with all these regulating services, that everything is dependent on, because you talk about your highly and very highly dependent sectors, but actually we know that all economic activity is reliant on ecosystem services, and many of these are complementary to one another, right? So if you disrupt one sufficiently, the others are going to be disrupted as well. So that seems like a very important topic. And for those who would like to read on that World Bank research that Romain mentioned, it's the Economic Case for Nature report. So it's really worth a good read. So next questions, we have quite a few individual questions on data, but I might just cluster those and ask a bit of a broader question. So both your reports highlight data challenges and gaps, but you've been brave. You've done an amazing job using sort of proxies of potential exposure to physical and transition risks, and come out with some really interesting numbers. And as we're wrestling with this in TNFD, I was wondering what you think were the biggest data gaps in your view, but also, how to be upbeat that you found it possible, where the good sources of data were, and what the whole system, including central banks and development banks, need to play in overcoming these data challenges. I don't know who would like to take that first. Yours.
Yes. Yes, I always indeed try to stress that a lot is possible in terms of data. So, of course, I mean, perfect data doesn't exist probably, but what and in that sense, our collaboration with the Netherlands Environmental Assessment Agency was very worthwhile. Is that I was amazed by how much nature-related data there is. So when I'm thinking out loud, I think it's more difficult to get to maybe things like indeed these locations of companies than it is to get to data for protected areas. I mean, there are a lot of open source nature data. There's a lot of open source nature data out there. So I saw some questions in the chat, so I tried to answer them directly as well. So for these production sites, we used the 427 data set. And I think currently they have been taken over by Moody's ever since, but maybe they are still using their own name, but it was 427. They also do a lot of work in so they started out with work on I think especially physical risks related to climate change. gaps. So I think that data set is rather unique in the sense that they have this worldwide coverage of all kinds of locations of companies, and that is of course often an issue that you, although the decline of animal pollination might be relevant for some activities in certain areas, this could be completely different if you go say a few miles north of or south. So this location is, I think, very essential for quite a few of these analyses. And that's both, I think, the case for physical risk and for transition risk. So also one of our analysis we did, and I think that was one of the questions I have also seen. We looked in the Netherlands for activities that have large nitrogen deposition. And since that's in the Netherlands, it's a heavy debate, and but it depends really much whether you are operating near a protected area or whether you're operating near a city, right? So that information, so both the location where you are producing, but also the amount of nitrogen you are emitting on a company level, that would be what would be information you need to, in the end, get to a risk assessment. So you can, in terms of exposures, it's a bit easier. It's a bit easier to determine the exposure to companies that emit nitrogen, but really to pinpoint whether these companies are at risk. I think that definitely is a next step for which more granular data is often needed.
Thank you very much. Anything further on data?
Yeah, I think I can jump in here. I mean, one of the difficulty that we are facing, especially when looking at globally, is the diversity of biodiversity within countries, right? So the difficulty is that, is it the case that the indicators we're using, the proxy we are using, are relevant for each of the different country and sectors that are being analyzed, right? So all of the analysis is trying to understand, okay, how do we connect the financial investment or the financial assets to the sectors, and then to the impacts they have on biodiversity in a specific country? And can we compare agriculture in France and Zimbabwe? Of course we can't. So the question is, the data is there. I think I'm going to join with Joris on this, is that in the end the data is there. It's just a matter of, are we looking at the right kind of data to measure the right kind of impacts and dependency for the specific context that we are looking at? And I think this is one of the key challenge here is how do we make sure that we are looking at with the right lenses? And I think that's one of the key challenge. And of course, this is particularly true in developing economies, where in that case it might be the case that there is less data. It might still be the case, but we still have to identify data sources and then develop further this kind of analysis. And this is also true, unfortunately, for input-output matrices, right? So most of the work that we are doing are based on these input-output matrices, and the data collection in developing economies, especially in sub-Saharan Africa, is very lacking, and so it is difficult to integrate the impacts that the different cross-border investment can take into the global analysis.
Thank you. Interesting. So I'm going to pivot now from data to decision making. So the million-dollar question, I'm sure you're expecting to be asked. So what impact or influence have your initial reports had in the Dutch and French financial sectors since publication and beyond? I mean, I think there's a number of questions specifically asking if they've shaped the agendas of ministries of finance, financial stability boards, and so on. So yeah, what impact in particular have you seen them informing any actions to better mitigate these risks?
Yeah, so I think during the writing of our report, a set of Dutch financial sector was also already busy with how biodiversity impacts their operations and what risks they are facing. So that is definitely, they were definitely already busy with that before we published anything. And I find it quite difficult to determine what the impact of our report was, inside a financial institution. I think international. So within our own organization, I think it has had an impact. So, for example, also within our asset operations, they are currently looking, okay, are we also ourselves exposed maybe to biodiversity risks, and what can we do in our own investment policies, and then finally internationally, there where we are at the table, so to say, in terms of for example the NGFS, or in other areas where we do see the possibility or the opportunity to push for this work, for this agenda, we do. And finally, I mean, in the end, I think one wants to see to implement, to incorporate it. One wants to take next steps in, okay, how are you going to incorporate this into supervision? And what we see there is that it starts to broaden from climate-related risks to environmental related risk, and biodiversity, I think, is one of the next topics besides climate. So to give that's I think a brief overview of the impacts I see.
Yeah, Romain, how about you in the French context?
Yeah, I would say it's quite similar to yours. I would say that internally, I think it contributed to raising, I would say, awareness on the question. Following the working paper, we published a Banque de France bulletin, which is a rather short, less technical document. And then we published as well a blog very recently that summarizes the paper. So it is contributing to some effort on that. Personally, with other people, researchers at the Banque de France, we're working on specific issues related, for instance, to imported deforestation, so on. So I would say that that there is some awareness that is being raised. I would say that the way in which it will contribute or not also depends on what happens elsewhere. And for instance, in France, what is quite interesting right now is that I think someone mentioned it in one of the questions. There was the Article 29 of the French law on energy and climate, which will require financial institutions to disclose on dependencies, impacts, and then also on the links between dependencies and physical risk, and the links between impacts and transition risk. So basically, I think that our paper could contribute to I would say, deepening the discussion on how do we measure these things, what are the challenges, what are limitations, and so on. And here, that's not the impact of our paper per se, but rather I would say the impact within a specific context, which is Article 29, which is not, which does not depend on central bank supervisor. It's on the regulator side. So I would say that these are some of the points. In our own portfolio, we have started as well at the Banque de France to integrate some biodiversity related considerations. So there has been some work on that. And then we're also contributing with everything we did on the paper to the work of the NGFS that you mentioned, Emily, earlier on with Inspire. So we really try to put all our insight, I would say, to the benefits of the NGFS work on this question. So I would say this is our limited, but hopefully a real contribution to raising awareness on the question.
Thank you. You want to respond on AFD, Antoine?
Yeah, I mean, of course, I can't say anything about the financial system in France, but in the case of AFD, indeed, the study and the joint work with Banque de France and OFB has been clearly pushing the biodiversity agenda more forward. And now we actually are developing a Earth strategy rather than having a climate and a biodiversity. The two are merged together, trying to assess the nature positive aspects of our project.
Thank you very much. So I'd just like to sort of start with, we've just got about 8 minutes left. So looking forward, it would be great to hear about what the next steps are for your organizations on nature related risks following these initial reports you presented today. And one twist to that is a question from Luciane, if you feel able to speak to this. Given your both institutions are founding and active members of NGFS, could you provide some insights on the guidance and further studies that will be coming from NGFS on mapping these risks in loan and investment portfolios? So your own organizations, and anything you can share about NGFS's next steps would be of great interest.
Okay, so shall I start again? Yeah, okay. So yeah, I already mentioned, I think, a few next steps. So we're looking into the systemic impacts of biodiversity loss, and then also how this, and then systemic impact, what does that mean? But in our case, that means, okay, what could be the impact on the economy? But this is currently a project that is in the early stages. Also considering what we can do with biodiversity loss risks in our own asset management. But also there, yeah, I mean, in that sense, we are also a financial institution ourselves. They also said to me, okay, what we, for example, miss is just like for climate, that there are these transition scenarios, so where you can align your portfolio with these scenarios. Okay, that would be super helpful for us as well. Yeah, they again, I think this work is starting, but not much developed. And then, yeah, finally, I think within supervision, it will become the next step should be, I think, to broaden the scope from climate to environmental risks, right? And I'm not only, I think, biodiversity risk would also be water stress or another type of environmental risk, but I think broadening that scope, that would be that's, I think, essential. And yet that's, I think, what we're seeing within the NGFS as well, right? I mean, they have started up these study group, and they will publish results, and I think this is a nice step up for further work within the GFS. And maybe Romain can add a bit to that, because I'm a bit further away from the NGFS work.
Sure. So on the NGFS, so we're in the process of finalizing right now the third report of the study group with Inspire, and it should be published on March 24. So that will be the end of this first study group. With hopefully a very interesting report. I think there's a lot in the final report that really digs further on all the questions that we opened in the vision paper and the interim report published in October. And from there, I mean, it's not yet official what the NGFS will do, so there's nothing I can tell, and there's not much I know actually about that. But I can say, I think with quite some certainty, that there will be some ensuing work. So there will be more on the question, although I cannot, and I don't know exactly what it will consist of. And then perhaps relating a bit more to internally Banque de France. So just to remind, perhaps, unlike I would say a little bit the DNB, we don't have what I would call a formal position on the question. I would say that DNB is clearly leading on that front, but there are quite a few research projects internally, including on the question of developing scenarios, where I'm working on that with one of my colleagues, and actually Antoine is also involved in that, in mapping what the stranded assets related to the nature-related shock could be. How do we start working on these scenarios for France? So this is not the institution itself, but some researchers within the institution. Personally, I'm also working on a project related to deforestation risk, and which is at the interface between the climate and biodiversity. And someone mentioned that there are a lot of data issues with that. I agree, and quite perhaps ironically, I would say that most of the data issues I have so far are rather on the economic data, including for supply chains, and I would say, than on the deforestation related data. So I think it's almost more on the economic side than on the nature side that I'm seeing problems so far. So yeah, there is a lot that will happen over the next few months internally and on the NGFS front, hopefully.
Thank you very much. And I apologize, Antoine, but I want to make sure we close on time. And there's just been a couple of questions on TNFD centrally, so we'll make time for that. So I'd like to thank, huge thanks to Joris, Roman and Antoine, to our speakers for your presentations and your really thoughtful responses. Thanks to all the participants for your active participation and questions. I apologize we didn't get to many really interesting ones, but I know our speakers might be able to respond to some of them individually. So it's been a really stimulating conversation. I wanted to close by advertising our next webinar, which will be on the 21st of February on natural asset companies. So we'll have speakers from the New York Stock Exchange, Singapore Exchange, and Intrinsic Exchange Group. Really looking forward to that. And there have been a number of questions just specifically on the launch or the release of the beta version of the TNFD framework. So we're planning that for March, and we are planning for the March forum webinar to be focused on an initial overview with task force members of that beta version. So please do join us at future webinars. Again, thanks to our speakers, thanks to you all for a really excellent session, and please join us next month. Thank you.